Imagine a market, right? Poised to outperform, well, all of Asia,
Yeah.
maybe even all emerging markets for the next decade. Sounds incredibly ambitious, doesn't it?
It really does. Makes you wonder.
My first thought was, okay, is this genuinely achievable or is it just, a bold headline?
A fair question.
But that's exactly what some of the really big names in global investment are forecasting. So let's try and unpack this.
Yeah, let's.
Today, we're doing a deep dive into the Korean stock market. It's making some serious headlines right now for some truly eye-opening reasons.
And what's really fascinating here, I think, is that this isn't just like speculation, not a fleeting trend.
Right.
We're going to be looking at some pretty detailed analysis. It's from a global investment giant, actually.
Okay.
And they identify specific, powerful forces at play, like deep structural forces.
Exactly. So our mission in this deep dive is to explore precisely why. Why are global investors suddenly so bullish on South Korea?
What's changed?
Yeah, what's changed? We'll look at the core driving factors
Yeah.
and that one critical risk that they're watching.
Always a risk factor.
Always. And we'll be distilling insights, directly from the expert sources, specifically an analysis by Morningstar Wealth.
A major global investment firm.
That's right, as reported by Bloomberg. Okay, so let's jump right into this, audacious prediction. It's from Mark Prescott. He's a senior portfolio manager at Morningstar Wealth.
Okay.
He's forecasting that Korean stocks, get this, are expected to deliver an annual average return of 11 to 12%
Wow. Annually.
annually over the next 10 years.
That is significant.
It really is. And he goes even further. He says, when you look at expected returns, Korea is, quote, unrivaled,
Unrivaled. Strong word.
very strong, and that, quote, this is the beginning of a reevaluation for the whole market.
A reevaluation.
Interesting. And to back that up, apparently Prescott has personally been reducing his exposure to Chinese and Japanese stocks.
Oh, really? Actively selling those.
It seems so, while significantly increasing his holdings in Korean equities.
Okay. That level of personal conviction, from a senior manager at a firm like Morningstar, that's quite telling.
It really is.
If we try and connect this to the bigger picture, the significance of such a long-term forecast and with high confidence, it's immense.
Right.
This isn't just short-term speculation we're talking about. It feels like it fundamentally indicates maybe a paradigm shift.
A potential shift in how a major institution sees an entire national market.
Yeah, exactly.
Okay, so we have this incredible forecast, but what's actually, under the hood here? What's driving such optimism?
Good question. What are the fundamentals?
I'm genuinely curious what Morningstar sees changing. Prescott points to two main reasons.
Okay.
The first one is the growth potential of AI-related tech stocks.
AI, of course.
He specifically mentions SK Hynix and Samsung Electronics, key producers of HBM.
High bandwidth memory chips.
Yeah.
Critical for AI.
Right. And Prescott views these companies as, quote, undervalued relative to their worth.
Undervalued.
But, in a market this competitive, what makes their HBM advantage so unique? Why undervalued? Is there a counter argument to that?
That's an excellent question because undervalued implies, the market's missing something, right? A future correction upwards.
Exactly.
Well, what's maybe overlooked sometimes is that Korea isn't just participating in the AI boom. In many ways, it's a foundational enabler.
An enabler? How so?
Think about the sheer computing power AI needs. HBM isn't just another component. It's increasingly becoming the bottleneck for performance.
Ah, okay. The limiting factor.
Precisely. And Korea's dominance here, both in market share right now and their longstanding R&D leadership, it means they hold a really critical key.
A key to the future expansion of AI globally.
You could certainly argue that. So while, yes, there's general market volatility, Morningstar's view likely hinges on just how foundational these specific components are for an industry that looks set for exponential growth. So their current pricing might seem, disconnected from future earnings potential.
Right, like the market hasn't fully caught up to that future role yet.
It's a powerful insight, I think, often overlooked.
That makes a lot of sense. It's almost like the market's been looking at them with, a rearview mirror, focus on old perceptions.
That's a very insightful way to put it, actually.
Instead of the high-speed future they're enabling. Am I oversimplifying, or is there a real psychological bit to this evaluation he talks about?
No, I think you're onto something. There absolutely is a psychological component. For years, you heard about the Korea discount.
Right, the discount. Tied to governance concerns, mostly.
Often, yes. tied to corporate governance worries. But now, with the second major driver Prescott highlights, that perception is actively being challenged.
Okay, so the second driver.
It's the Korean government's political will, their determination really to reform corporate governance.
And we've actually seen concrete action here, haven't we?
We have.
Prescott specifically pointed to that recent passage of a Commercial Act amendment in the National Assembly. He views that as a clear, quote, signal to push governance reform through law.
And that signal, while maybe symbolic to some, carries significant weight for investors.
So how exactly do these legal changes, these structural shifts, how do they directly influence investor confidence, especially with the long-standing chaebol issue?
Well, think about it from the perspective of long-term investors, particularly foreign ones. They've historically been wary of that family-run chaebol system.
Because it often marginalized minority shareholders.
Exactly. So this isn't just symbolic for them. It represents a genuine structural shift. It's designed to protect those minority shareholders and, crucially, to ease that historical distrust.
Okay, so it's about building trust through legal frameworks.
Precisely. This kind of legal evolution reshapes market trust. It makes Korea seem like a more predictable, more attractive environment for foreign capital.
Right. Shows commitment to global standards.
It does, aligning corporate practices with what global investors expect to see.
It's fascinating, then, to contrast Korea with other markets, particularly China, given some of the challenges there recently. Prescott observes that Korea offers, similar market attractiveness to China in some ways, but, and this is key, with stronger macroeconomic stability.
For stronger stability.
Right.
What contributes to that perception?
What exactly underpins that, especially right now?
Well, he details a couple of key factors. First, Korea doesn't seem to have that real estate supply overhang backlog.
The property market issues we see elsewhere.
Right. That's a significant concern in some other big Asian markets, but less so, apparently, in Korea. That removes a major potential instability source.
Okay, that makes sense.
And secondly, as we just discussed, there's this higher level of trust emerging, or perhaps returning.
In corporate governance.
Exactly, because of these reforms. So you combine those factors with Korea's pretty robust export-driven economy, and you get a sense of greater predictability, perhaps greater resilience compared to some regional peers.
And we're actually seeing this play out in the market numbers already, aren't we?
We are indeed.
The KCOS TI index, it's up nearly 30% this year.
An incredible run.
Making it one of the best performing global indices. I mean, that's undeniable evidence of current momentum.
Absolutely.
And remember, around the time of President-elect Lee Jae-myung's election, back in May, June.
Yeah, there was a lot of focus then.
Global funds apparently poured in about $3 billion U.S.,
Right.
roughly 4 trillion Korean won.
A huge inflow.
Into the Korean market just around that period. So this isn't just like a flash in the pan, is it?
Doesn't seem like it.
We're seeing this momentum continue, translating into real market performance.
Absolutely. In fact, the KOSPI just recently hit a high. It was a 3-year, 10-month high on July 9th.
Wow, okay. Very recent.
And then it opened even higher yesterday, July 10th, at a new yearly high of 344.14.
So these aren't just isolated spikes.
No, they feel like strong indicators. The market seems to be actively digesting and responding to these fundamental shifts we've been talking about, building on that initial inflow.
Okay. But as with any long-term forecast, right, there's always a but.
A potential curveball.
There's always a critical hurdle, something that could derail even the most optimistic predictions.
Always a risk.
Prescott identifies one key risk factor for this predicted long-term boom.
Okay, what is it?
Avoiding former U.S. President Trump's tariff policy.
Trade policy, specifically tariffs.
Yes. What does that specifically entail for Korea? And, I mean, what's the timeline look like here? It sounds potentially quite immediate.
He outlines what he calls his basic scenario.
Okay.
Which is that a U.S.-Korea trade agreement gets reached within the next 2 weeks.
2 weeks? That's an incredibly tight timeline.
It really underscores the urgency, doesn't it, and the potential implications.
So what happens if that doesn't happen? If there's no clear agreement or tariffs come back?
Well, that could introduce significant uncertainty, particularly for Korean exporters in those critical sectors we've mentioned, like tech.
Right. Could hit the very companies driving the AI boom.
Exactly. And that, in turn, could definitely dampen the otherwise bullish outlook. It could impact the very companies poised to benefit from AI and the governance reforms. It's the main external risky flags.
Okay. So, wrapping this up, What does this all mean for you, the listener? We've seen this powerful combination, right? Cutting-edge AI tech, these determined governance reforms, and that underlying macroeconomic stability.
All coming together.
Yeah, all positioning Korea for what a major global investor is calling an unrivaled decade ahead. It's a really compelling narrative of a market potentially in transition.
It really is. And for you, the learner, this deep dive hopefully offers more than just market insights.
Yeah.
I mean, given Korea's proactive approach, especially on corporate governance and its strategic position in the global AI landscape,
Yeah.
what broader lessons could maybe be drawn here?
Lessons for other countries.
Yeah, about fostering investor confidence, about driving economic growth. For other nations, maybe both emerging and developed, who are looking to unlock their own potential. Something to think about.